The $300 billion in Russian assets that were seized is still a hot topic of discussion. Many Western countries seem to think, hey, if you can seize the enemy's money, meaning Russia's money, and give it to Ukraine to attack Russia, that would be cool, stylish, and satisfying. But it doesn't end there, because the perspective isn't just from the West. There are other countries, other nations looking in, and many of them disagree. Not necessarily with the act of seizing the assets itself. It's not because they love Russia, but because it would show off a kind of power that says, hey, money in the Western financial system isn't stable or trustworthy. It can just be seized. One country that has come out to warn about this is Saudi Arabia. They have directly warned the G7 that if they really go ahead and seize Russia's assets, Saudi Arabia will dump Western government bonds. Thank you everyone for following the Sai Money Monster channel. Right now, the number of subscribers has gone up a lot. It really encourages me, and I'm so happy. Thank you for every single comment and all your support. If you have a different opinion, I absolutely welcome it, but please remember to comment respectfully and with courtesy. No need for sarcasm or putting anyone down. Let's not attack anyone because there are many perspectives and we can all coexist with our differences. If anyone is interested in supporting my channel, you can support it as well. You can do so through this QR code, and any income received will go towards supporting my team, giving them more motivation to keep working. It will also help me access more information from various sources, which I can then share with all of you like this. Or if it's not convenient for you, just hitting like, sharing, or subscribing to my channel and my team already makes us really happy. Thank you so much. Bloomberg reported that Saudi Arabia has spoken out, saying, hey, we're not happy if Western countries just freeze our money. Back then, Saudi Arabia was already shocked. In this clip, I'll tell you just how shocked Saudi Arabia was when Russia's assets were seized. There's even a graph showing the massive sell-off that happened. Freezing assets is one thing, just holding the money and not doing anything with it. But if Western countries, both the US and the EU, actually take this chunk of Russian money and $300 billion, if you take that and use it for whatever purpose, not necessarily to attack or anything, just use it and not keep it with the intention of returning it someday, Saudi Arabia is not okay with that. They see this as instability, as a sign that the Western financial system is untrustworthy. And like I said, it's not that they're standing up for Russia because they love Russia or anything. Are they allies? Well, they do business together. But the reason they're acting this way is to protect themselves, to protect their own interests. Because if Western countries can seize Russia's money once, there's a chance it could happen a second, third, or fourth time. That means if anyone gets into trouble or does something the West doesn't like, will there be a rule that allows the West to just seize money in the system? Who would want to invest or do business with Europe then, right? And when Saudi Arabia says they're going to dump Western government bonds, let me explain what that means. Government bonds basically mean borrowing money. Each country borrows money by selling government bonds. So when Saudi Arabia says they're going to dump Western government bonds, it means they're not going to lend money anymore. Get it? One country that Saudi Arabia specifically mentioned was France's government bonds. Right now, their political situation is bad. The government budget is in deficit, and their credit rating has even been downgraded. You can check that out in this clip. But would you believe it? There's something even worse than having a ton of debt, a ballooning deficit, being buried in debt, or debt surpassing GDP. What's worse than countries having massive amounts of debt is not being able to borrow new money. When a country with low liquidity can't borrow, it can lead to disaster. But let me clarify, I'm not saying that just because Saudi Arabia alone refuses to lend or buy government bonds, it will cause any country to collapse. I just want to make that clear first. But if Western countries, given the current economic situation, lose even one lender, would it have an impact? Yes, it would. Because if Saudi Arabia says no, there are bound to be other countries close to Saudi Arabia that might want to follow suit. Now, I'm not even talking about the government budget anymore. The government budget is used for things like welfare and domestic spending, right? But there's one section I want to talk about. It's the section where they compete fiercely, almost to the point of bloodshed. high tech, technology, semiconductors to be exact. Because right now, if there's no loan money, if they can't raise funds, there's going to be a real problem here. The tech industry is fighting tooth and nail because it's a matter of national security. Whoever has the best chips will have the best weapons, the best AI, the best cyber warfare capabilities. And if there's no money to develop all of this, national security will shrink, plain and simple. If someone has more money, they have a better chance to develop war, right? So let's take a look at which countries are allocating the most budget to the semiconductor industry. The largest block belongs to China. The Chinese government has allocated a budget of up to $142 billion to the semiconductor manufacturing sector. Meanwhile, the United States has set aside a budget of $39 billion, but so far has only allocated $32 billion. As for Europe, if you combine all the countries in this group, it comes to... It still haven't gotten very far, meaning the budget is still quite small, just like I mentioned earlier in this video. As for the chip war right now, the United States is telling its allies, European countries, and G7 nations to join together and ban the sale of chips to China. This will only further reduce the revenue that European countries and the US earn from trading in the chip industry, chip-making machines, and anything related to chips with China by as much as $3.9 billion. So sales revenue is shrinking, and the willingness to lend is also drying up. Does this have an impact? Let's talk about semiconductors. Now, let's get back to our main topic. Saudi Arabia wants to dump Western government bonds, right? If Western countries actually seize Russia's money, here's the question. What would happen if Saudi Arabia really did dump Western government bonds? Would it shake up the US and EU government bond markets? Let's take a look at just how serious this threat from Saudi Arabia really is. As you can see, Saudi Arabia used to be a die-hard fan of holding US government bonds. Back in 2020, Saudi Arabia held as much as $184 billion in US government bonds. But after that, after peaking, by 2023, they had slashed their holdings down to just $180 billion. And if you look at this long line here, even from that peak, that $180 billion suddenly dropped sharply. This happened when Russia attacked Ukraine, and it was announced that the US and EU had seized Russia's money. Like I mentioned earlier, they just froze Russia's assets, just put a hold on $300 billion, and Saudi Arabia got scared. Well, maybe not scared, but worried that they might be next. Just freezing the assets was enough to shock Saudi Arabia this much, so it's no surprise that if their assets were actually seized, they'd definitely run for the hills. But if you ask if Saudi Arabia wanted to dump all the US government bonds they're currently holding, right now that's $108 billion, would that shake up the US government bond market? The answer is no, it wouldn't. That's because the US government bond market is absolutely massive, like unbelievably, enormously huge. That's a staggering $27 trillion. If you take a look at and compare the massive size of the US government bond market, its total market size is like Godzilla. While the amount Saudi Arabia might dump, $108 billion, would be like nothing more than a tiny fingernail. Let's say Godzilla has 3 claws. If Saudi Arabia breaks off 3 of Godzilla's claws, Godzilla would just be hurt. Maybe it would hurt a lot because its claws got broken, but the claws will grow back soon enough, so it's not a big deal. So if Saudi Arabia wanted to dump about $100 billion worth of US government bonds, it might cause the price of US government bonds to drop for a little while, just a short time, and then things would go back to normal. But the immense destructive potential that Saudi Arabia is talking about isn't just about the sheer volume of financial capital. This destructive power isn't about how much US government bonds Saudi Arabia holds and could suddenly liquidate on the open market. The destructive power I'm talking about here is the symbol of financial unreliability, of money within the entire Western financial infrastructure, whether it's the US dollar or any other global currency. Even the euro, for that matter. The three claws that have been broken may not hurt, but they become a symbol of growing distrust, showing that we can no longer trust putting our money in the Western financial system. This will make it harder and harder for Western countries to borrow money. If they still want to borrow, they'll have to raise interest rates, because raising interest rates on government bonds, bond prices have already dropped, and policy interest rates can't be lowered. This could lead to the possibility of banks in the United States collapsing. If banks fail, it will be followed by companies and state enterprises going bankrupt. This will result in people losing their jobs, no money, and the economy will spiral into a cycle of poverty. There was actually someone who once spoke out about the US dollar and US government bonds, specifically about their credibility. Something like that happened when the United States had its credit rating downgraded to just AA+, right? So Alan Greenspan, the former chair of the Fed or the former chair of the US Central Bank, he gave an interview saying that the problems with the US dollar are actually problems for those holding US government bonds, not problems for the United States itself. Because no matter how much debt the United States has, it will always be able to pay it off, since America can just print more money.
That is exactly right. So it's not like an empire that has total control over everything, right? That's right. And then
there's another point to consider, especially for those in finance or investment. Capitalists always have to think carefully. Whenever we do anything, whenever we buy something, whenever we decide where to put our money, we think it over and over. Is it worth it? How? The benefits always come first. It's the same for countries, especially Saudi Arabia, which is the world's #1 oil trader. Of course their interests come first. Even though US government bonds can offer up to 5% interest, if it was really worth it, they would have quickly snatched them up. They would have held on to them. Because if the interest rate is 5% and it's really worth it and you can buy them, why wouldn't you grab as much as you can? But they chose to say, hey, 5% isn't enough to cover the risk of putting our money there. They decided that if something doesn't sit right with them, they'll just dump it. So right now, no matter how high the interest rate on US government bonds gets, it's still not worth the risk. Yeah, exactly. That's not it.